Hello everyone. I am very excited to bring to you today a short introduction on our upcoming RedHex Hybrid Long-Short Fund. The fund launch is expected to start on June 2nd and end on June 16th, and we are really looking forward to active participation by all of you. Let me start off with a quick small introduction on the category itself, Specialized Investment Fund, SIF. SEBI has really introduced this category to sit in between mutual funds and PMS and alternate investment fund category, in a way trying to blend the best of both the worlds. While on the minimum threshold has been kept lower at 10 lakhs as compared to 50 lakhs or 1 crore for PMS and AIF, SEBI has also offered a lot of portfolio flexibility in the SIF category. And most importantly, a very high level of transparency and governance, very similar to what one expects from mutual funds. So all in all, it's a beautiful middle ground, a best of both worlds as far as SIFs are concerned. Let me now move on to the RedHex Hybrid Long-Short Fund itself. This really is a hybrid long-short fund intended to give fixed income-like returns with very low volatility and very low sensitivity to equity markets. And in that context, if you look at the broader fixed income allocation of investors over the last 2 or 3 decades, we have moved from simple fixed deposits in the late 1990s to debt mutual funds and then on to credit risk funds through the 2010s and 2015 to 2018 period. And then all of that abruptly changed with the changes in taxation, which meant that debt funds became fully marginal taxation impact and the returns, post-tax returns really collapsed. That prompted a big shift of money into various other products to fill in this gap, be it arbitrage funds, be it hybrid funds, and of course the AIF Cat 2 funds itself, which also meant a big change in risk profile of that category. What we are intending to do is really plug in that gap, the gap in between the traditional mutual funds and Cat 2 AIFs through our RedHex Hybrid Long-Short Fund. It really blends a lot of factors, be it in terms of redemption ease that one expects with mutual funds, unlike the long illiquidity periods of AIFs, let's say, but at the same time keeping credit risks moderate, concentration risks low, but most importantly also bringing together the tax benefit in this kind of a product. And that's what positions this fund beautifully when compared to products on either side of it. Let us now move on to the how, the portfolio construction part of it. As you can see, our overall allocation in the fund of about 25 to 35% to arbitrage. This is pure non-directional arbitrage with no really directional equity component to it. Up to about 10% we are intending to invest in real estate investment trusts, REIT units, which have really grown phenomenally over the last few years. A 15% allocation to AAA bonds in the 3 to 5 year segment to provide liquidity as well as for margin requirements. And that really means half the portfolio, 50% of the portfolio is in very liquid, high quality investments. The remaining 50% we are really intending to get the yield pickup that the product overall desires to provide, with about 10 to 15% allocations to median A+ rated bonds in the financial services segment, similar 10 to 15% allocations in securitization, that is pass-through certificates, typically rated in the AA- space. Another 10 to 15% again in non-financial or manufacturing company bonds, again median rating of A+ to A. And finally, up to about 10% investment into InvITs, which again are growing rapidly and provide an exciting opportunity to be able to make alpha. So this portfolio construction, if you really slice it in a different way, we are looking at low-risk stable return components which are provided by the non-directional equity arbitrage and the high-quality debt component. And we are looking at alpha generation opportunities really coming from the yield pickup, which we are investing judiciously in median A+ rated bonds, spread compression by identifying upgrades and spread compression stories in the credit space, and finally the investments in REIT and InvITs, which again provides a potential alpha opportunity. So that's the way the overall fund is structured, really combining a lot of various ingredients, but at the end of it, the idea is to provide a low volatility, low sensitivity to equity markets with the advantage of tax benefit. The team has a good track record of managing large size credit funds. As you can see, we have managed upwards of 6,500 crores of AUM in the credit category in the past. Overall, we are very excited to be coming out with this very unique, differentiated product in the market, very different from all the SIFs that are on offer. And really, our intention is to provide you an opportunity to fill a core investment allocation in your overall portfolio. We're looking forward to your participation. Thank you very much.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.